The final part of question 4c, was a little theory question for 3 marks, and it was not done well. The average was 30%, which is one of the lowest averages for the entire paper. And the reason is it asks about a particular topic, in this case accrual accounting, which is something that we do a lot, we apply it, but we may not understand it, like why are we doing the things that we do. So the question itself says, GB Jeans prepares reports using the accrual accounting system. Outline 3 features of the accrual accounting system. So what we need to do is just go back and realize, what are we doing and why? Well, what we're doing is when we calculate our net profit, we've basically got 2 choices. One, we can do it based on cash accounting, and if we did it that way, we'd measure profit by determining whether cash has been received or revenue has been paid, and our profit would simply be how much revenue has been received minus how many expenses have been paid. Now, unless I'm a very, very small business, 99 times out of 100, those numbers are going to be wrong. Just because I haven't got revenue doesn't mean it hasn't been earned, and just because I haven't paid an expense doesn't mean it's been incurred. So what we've been doing in Year 12 accounting is using accrual accounting, and that measures our profit by determining whether we've actually earned revenue or incurred an expense. So we take our net profit as revenue earned minus expenses incurred, and we're not concerned whether cash has actually changed hands. And what does that mean in practice? It means that some of the revenues and expenses that we record don't impact cash at all. So for example, if we made a credit sale, there'd be no impact in cash accounting, but in accrual accounting, we'd correctly record an increase in our profit of $1,500. Likewise, if we had a bill, in this case the internet, incurred but not yet paid, under cash accounting, that actually would not be recorded as an expense, which is ridiculous. If it's incurred, it's an expense. We could have a stock gain. Now, when we have a stock gain, there's no actual cash coming into the business, so we wouldn't actually record any profit under cash accounting, which is wrong. A bad debt, so a customer wasn't going to pay us back, well, there's no cash coming in or out, so therefore no impact under cash accounting, but in accrual we'd record a bad debt. And another example would be depreciation. Depreciation is a really important expense, but under cash accounting we would never ever charge it because depreciation is not a cash flow. In accrual accounting, we correctly recognize that as an expense. On the flip side, there's actually going to be some cash transactions that aren't revenues or expenses at all. Say, for example, a customer prepaid revenue of $900 for goods that we won't deliver until next month. Now, in cash accounting, we don't worry about whether it's been earned. We just worry about whether it's been received. So we'd actually call that revenue for this period. Now, that's incorrect. If that revenue hasn't been earned, it shouldn't actually impact our profit under accrual accounting. Likewise, if we prepaid wages to an employee but they haven't actually performed the work, under cash accounting we'd actually record that as an expense when really we actually haven't incurred anything yet because the economic benefits haven't been consumed. If we had $60 of accrued revenue from last period that we actually got, say bank interest, so bank interest for the previous month was received this month, well, we'd actually record, in cash accounting, we'd record that as $60 of revenue, and that's incorrect. It would actually be revenue for last period, not this period. Another example could be accrued insurance of $960 from last period was paid for this period. Under cash accounting, we'd record it as an expense just in the wrong period. We'd record it for this period. That's wrong. It was an expense last period. So in each of these examples, the method of accrual accounting, those were the numbers that were actually correct. They're the ones that are going to get you the most accurate profit. So there's all the examples we just went through. The cash accounting figures are wrong. The accrual accounting figures are correct. They're the most accurate. Likewise, in the examples where we got cash but that didn't necessarily impact the profit in accrual accounting, again, the figures on the right for accrual accounting are the most accurate. So basically what we need to do to get the most accurate profit is use accrual accounting, and to do that we're going to need to make balance day adjustments for a lot of things. So these are topics we've done throughout the year. Lots of adjustments that we do on balance days. Some are revenues, some are expenses, but that's fundamentally what accrual accounting is. It's doing adjustments where there's a discrepancy between your cash and your net profit. So what we need to do now though is figure out an answer that says outline 3 features of the accrual accounting system. So based on our knowledge of it, what are 3 points we could talk about? So I'm going to list more than 3. Obviously we would only need to give 3 on the actual paper. So I guess one of the points is net profit under accrual accounting is actually revenue earned minus expenses incurred. It's not how much revenue was received and how many expenses were paid. Another thing we could talk about is, well, that means revenue earned is not just cash received, and what would really complement that statement is to have an example. For example, a credit sale. That's a great example of a revenue earned but not a cash received. We could have expenses incurred, not cash paid, and provide an example. A great example would be depreciation. Depreciation is an expense we have to have, but because there's no cash paid, unless if we did cash accounting, we would never ever have an expense for depreciation. A real key feature of accrual accounting is that all transactions are recorded regardless of whether they involve cash or not. And again, we could use another example. We could say discount expense. Discount expense is the opposite of cash. It's actually not getting cash. So that would be a great example to use. And lastly, to do accrual accounting, we're going to need to use balance day adjustments, and we could use any of the examples that we've done throughout the year, say a prepaid expense, an accrued revenue, depreciation, but together there's 5 points there. We really only want to give 3. So looking at the marks here, we can see that half the state really couldn't come up with one sort of key feature of accrual accounting, and that's interesting because you do accrual accounting. You do it when you do your ledgers, your journals, your reports, but you may not actually be able to put into words what it is that you're actually doing. And if you look at it, only 12% of kids could effectively actually put that into words. The average was very low, 0.9 out of 3. Looking at the examiner's comments, many students just provided a rote-learned definition of accrual accounting. How is it calculated? How does it calculate profit? But didn't really give any features. We want 3 features. So if you just say it's revenue earned less expenses incurred, well, that's 1, but that's not it. That's just a definition. So we don't really have 3 features if that's all you're going to talk about. High scoring responses mention the need for balance day adjustments to make our reports accurate. And lastly, we want full sentence rather than abbreviated dot points. You can write in dot points as long as it's full sentences. However, what we're saying is don't just do a dot point with 3 or 4 or 5 words. It's not going to be in enough detail to get the marks required for full 3 out of 3 responses.